None of VPN Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPN Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPN Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPN Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. Monday again. Sort of a lot going on. I guess the market still remains in this range that we've been in for a while. It's still pretty boring. So we're going to try to make this an interesting show today, right, Mitch?
We're going to do our best.
Okay, well,
There is no try, right?
Yeah, it's Yoda time.
Will or not.
Yeah, do or do not. Anyway, folks, appreciate you watching again. I know we've got a bunch of regulars, and they seem to be similar to the same ones. We can tell to a point, tell what state you're in, and all that kind of stuff. So that's good. Usually Monday show's a little more watched just because of the beginning of the week, and so big week ahead. I mean, giant week. We've got FOMC, we've got unemployment, we've got everything you can throw at this thing this week. So it should be interesting. Today's the light day, although Mitch and I were just chatting offline before the show, talking about I guess the what is it, Zillow and Trulia or something.
Yeah, Zillow buying Trulia.
Yeah. So we'll talk a little bit about that because it's interesting enough. We had a buy come out on Trulia right today.
Right, on the 3.2 system.
Yeah. So anyway, we'll talk about that and cover that. There's a sort of interesting backstory and those type of things. We had a report today. It looked like we missed on what was it? Existing home sales, right?
Pending home sales.
Yeah.
0.3 was the consensus. The actual was negative 1.1%. So
right.
That's substantial miss.
Yeah, and that goes along the lines we were kind of beating on the real estate market. I think it was on Friday's show, just talking about how it really isn't happening, and that really isn't the future of America. That's not what's going to save us. There seems to be, after the crisis, seems just to be a lot of shifts in, and I guess not just market sentiment, but people's attitudes toward owning homes. The lower end homes, 250 and under, seem to still be doing pretty well. High end market is super high end for the uber rich is always about the same because those are all cash deals. But even in the upper end of the market here, just continues to be. North Scottsdale is pretty upper end, probably average is probably close to $1 million, but it goes from $1 million to a gazillion, depending on who you are. Peter Lynch has a place about 1.5 miles from here. He's trying to sell for $10 million. Don't think I guess he maybe will find someone, but it's not very likely. I think not tomorrow anyway. You got to find that special buyer that has that money and wants to be. See, it's actually going to be nice here today. It's only going to be like 104. So, but anything under 110 is good at this time of the year. But it's been a little crazy. So, from the standpoint of real estate, just not going to be the driver of the economy. Not sure what is, and maybe that's why we have such terrible numbers. These 0.2, 0.3, and or not 0.2, but 2 and 3% growth ranges, and obviously that's with the Fed's help and everything else, it's been able to drive the markets to levels that we could have only dreamed about one day. So even though we're doing the typical chop on the at these high end levels that we've been seeing. That's about it. Anything else out there, Mitch? Right off the bat?
Not right off the bat. I mean, we opened substantially lower, I think, because of that pending home sales. We've recovered quite a bit, and we're going to go into that in a second. But yeah, we're going to talk a little bit more about the housing situation with this deal, as well as got the Case-Shiller index getting released tomorrow. So that'll be interesting to see where that goes with that release. We're still quite a ways away from that 189 level we were back in '06 on the national index.
Right.
I think right now we're right around 150. So. Housing is not going to be the savior.
No, it's not the driver, and there really isn't a driver.
Right.
I guess rumor is that Obama is going to give 5 million illegals a work card. So one of the interesting things is, speaking of real estate, I am in the process of building a new home, and the real estate, the building industry, the construction industry was, as one guy said, literally taken over by the Hispanic workforce, and the work quality is not what it used to be at one stage. And most of the people after the crisis just left the business. So it's sort of like having an airline. You have 10 planes, now you're only flying 4 planes, but you look like you're busy because all the planes are full. In reality, you're running about 40% of your capacity, and that's more or less how it is here right now. There's just nobody to build, and some of these lower end markets, so-called our president, who's for the middle class, is just destroying any of those lower end middle class jobs by a lot of these some of these workers that are coming in that are willing to do just about anything for anything or for any price. So it's getting kind of crazy, and I guess maybe we feel the impact more here in Arizona, since we're literally 10 feet from all the ground zero and everything that's happening here. So anyway, let's move on and let's get to the markets here. Enough rhetoric and small talk.
All right.
And let's go ahead, and I've got the weekly S&P up here, and we're seeing it's somewhat interesting because last evening, before I saw the first tick of today, the PPM1 was 0.52 on Friday. It's now 0.38, so we've dropped substantially with just more or less a flat move. Obviously, this is a weekly graph, so this gets recalculated all the time. So by the time the end of the week happens, maybe this looks a lot different. Like I said, we've got a lot to go through. We got the Janet Yellen going to be speaking on. They've got the FOMC meeting, then she'll be doing a conference call on Wednesday, and of course the FOMC minutes will be released on Wednesday afternoon. But there's everything else from ADP coming out, and then it's a barrage of economics. And while all that's going on in the backdrop, is all the earnings that are coming out. Really didn't look real close at the earnings schedule, as close maybe as I should have, but I'm sure it's fairly big because we're getting into like the third week. It should be fairly heavy. Mitch, maybe you can go on and that one site that we're looking at, the Zacks, and
pulling up the total right now to see how many companies.
Yeah, they kind of give a daily. They have a pretty robust environment there. But so the trend from the weekly trend is still in trend mode. 0.38, 0.24, and 0.28 I guess it's maintaining 0.24. The PPM2 has dropped just slightly. Let's call it at the trend mode, 0.25 or greater. So it's right there. So we are seeing some of this stuff start to roll over just a bit, not a whole lot, but it is starting to flatten out a little bit. I wouldn't call it rolling over, but more of a flattening out. If we go to the daily mode here real quick, and in fact, I'm going to do two things here. I'm just going to take off the trading system real quick, just so we can look at the pure numbers. The 40 period moving average here is the slow average is 1960.57. Medium average, which is the 21, is the 1974.05 and 1977.09. So we have traded below the mid average and traded back above. I keep expecting, I'm not sure why, maybe some fantasy, I keep thinking that we're going to hold the S1 on the weekly projections. If you look at that, I guess we can go through that a little bit here, Mitch. But that number was 1971.65, and we've already been below that. I believe the low was 1967.31, and R2 was 1964.10. So we've held R2. As Mitch, we talked about, we're bouncing off of this level a bit. We're down about 340. It looks like it's starting to stall a little bit. We'll go through some of the intraday stuff, but there is no trend, and I've talked about this from several different angles over the shows over the last couple of weeks. But the daily charts here, let me take off this here. You can see is we're at ppm1 is 0.01, minus 0.01, so basically flat, down just a tick. ppm2 and 3 plus 0.04 and 0.05, so about as flat as you can be. And when you look at the trend over here on the right, you can see that's just completely flat. There's no momentum at all, and that I did not mean to do. Here we go. Flash over to 2.0 was an error. Moving my mouse around. But anyway, the bottom line is this trend on a daily basis is very, very flat. And if we go down to the next level and we go down to a 60-minute bar, so each one of these bars, this is the cash market here, is actually, you can see here, has been in a downtrend, but it is starting to flatten out here a little bit. We're around resistance zones right now at this level, but we are in a formation that could start a rally back, but we're not going to go to new highs. We'll probably head toward the 80 sometime between 1980 and 85. The crazy number, I don't know, I had an old customer many years ago, probably 30 some years ago, used to always say, how do I come up with these numbers that are that we just missed somehow? 1985.60 number I harped on. We needed to close over that Friday, did not. We closed below it. It continues to be the key number. The Fibonacci number that came out of the VPM range projection tool, 1985.70 for today. So not that's basically the number. That's the pivot point in this pattern, even though we were able to render a slightly new high from a historical basis last week. We printed up to 87, I think, and change. I can look at exact number, but we made a new high, but we were unable to stay above that 85.60 number. So we're just it's kind of elusive, and we've seen this before where the market chops around and goes through that. This week is not only all the news that we have coming out, but it is also the end of the month, and we're seeing the monthly graph. I mentioned that a bit in commentary just briefly, but let's go over there and take a look at, I always call this a super slow motion chart, and it continues to show that the moving averages are, and this has changed a little bit as well, not by much though. 159 for ppm1 as far as the rate of change, 159 for ppm2. They're exactly the same now, and 1.07. So what I've talked about on this chart, when you're going to see there's two things I want to cover today. When you start to see this thing flatten out, we're going to have to see the ppm1 drop below 1% per month. That's not going to happen for a couple more months yet if the market stays sideways. And I talked about also that the key number was we needed to close on Thursday is the end of the month. Actually, it needs to be above the 1964.10 on a monthly basis, just to maintain the momentum as far as not seeing this contract anymore. We saw the ppm1 last week with the prices that we saw last week was 1.62, so we've managed to just downtick a little bit, but 159 is a hugely robust number, and it will take a lot from a long-term viewpoint to actually do anything to even try to derail this trend that we're in. So the story that continues to unfold, we see little random movements here up at these levels that we've seen. This story is still a very strong uptrend and no signs at the moment. Now, if we start to see a decel in the PPM1 over the next couple of weeks, depending on prices, matter of fact, it'd be interesting because on Friday morning when we do the show, as soon as we have a tick, we'll be able to look at the monthly momentum because we'll have the first tick of the next month for August. We'll have that on our screen, so we'll be able to see whether there's a loss in momentum or not at that point. It's just like what we saw here on a weekly basis. Last week it was 1.6 or 0.62. Now it's 0.59. So we did see a little decel in the weekly, but not much. It's not material, certainly from a trend standpoint. And so everything remains intact. The story remains the same, as boring as that might be. It is what it is. It's my job to report and to help you understand what's going on within the trends. As usual, when I get done with this, I'm going to bring Mitch back on, and we'll go through the database rotation and talk about that. We saw a little bit more selling, not really material, but he'll go through that here shortly. But I think from a trend standpoint, not much you can say. The downside is limited. We may have already seen the bottom of the week. If it were to get through 1964, then the next major levels is 1956.60 and 1949.90. I don't see a lot of possibility. There's some serious, I made a note here, there's a serious number here. Around 161 is I forget one of the averages here. Let's see, we should be able to find it pretty quick. I know what it was. It was I believe it was the 10 period moving averages on a weekly. Let me just look here. 1961.63. With that at a 0.37, it's not as robust as it was. As I mentioned, that was 0.42. So we've flattened a little bit, but at a 0.37, the probability of it getting through that level and remaining below that level is very, very minimal. So I guess we could spike down to, in an extreme case, to 1956.60, but I wouldn't expect we would close below that level on a weekly basis, which would be obviously Friday. And we've got the slight element coming in with the monthly close to watch on Thursday, as I just reviewed. So real quick before moving on and bringing up and going through the database, let's go ahead and take a look at a couple of the other markets that are here. And let's look at our favorite market, the 10-year notes here. 10-year notes continue to be in the 240 range, 248.7 this morning. They're actually up a little bit, not by much. There's not a lot going on. Geopolitical, all of the issues, regardless of what's going on in Gaza, the Ukrainian situation is might as well be last year. That doesn't appear to have any influence whatsoever on anything. And then from events in Israel and Gaza, you can expect that to be somewhat dynamic, but that's even faded to the back, with the exception of protests that are going around major cities in the world, pro-Palestinian, pro-terrorist. So that's interesting, but I mean, this is a social world we live in. It really comes down to who's willing to show their face and get out in a crowd. Who's obviously there's not a lot of passionate folks on the other side, I guess, or pro, whatever you want to call it. But anyway, there is no effect at all with the geopolitical stuff. The maybe flight to quality that we saw, it has been, completely run its course as far as that goes. There's really not much there to really talk about. And I didn't bring it. I think we talked about it briefly last week, but let's go ahead and put maybe put GLD up here real quick just to cover a couple of these some of the commodity stuff. Continuing to be in the flat line as well. Expectations for higher prices still exist from the standpoint of the pattern that's unfolding here. this pattern has a much higher probability to move up than it does down from this type of configuration. It could move down, but it would be actually, if it did break down substantially underneath the probably 1200 level, you'd have to get down to it at that stage, and it would be pretty devastating, and maybe some predictions of 900 gold would be real. I don't think that's how it gets there right now. There's some other things going on, and especially if you go over and go to the super slow motion chart, you can see the monthly graph has already started to work. This base has been long enough now that it's starting to show signs that it is bottoming. We'll see here, we still have negative ppms across the board on the long term, so trends are down, but the pattern is flat, so a lot of the downward momentum has dissipated for the most part. So anyway, we'll see how this all plays out. We could run back to that 1450, 1500 range and still not change the picture that we're seeing here from the standpoint of the downtrend. So it would be more of a retracement going on there. Chart I was watching this morning, if I can find the right one, here we are. I've talked about these before. This is the S&P versus the EFA, and we are seeing a little bit of a turn up. So when the U.S. market, I keep saying, when this chart turns and the Europeans are outpacing us, whether we're going down faster than them or whether they make a turn and start to rally, I think the scenario will be, because we've outperformed on the upside, when we finally do roll this market over, we will go down faster than the Europeans have, because they haven't had the same momentum. We've outpaced them. You can see this chart that's on the screen right now goes all the way from 2009 to current. So since the bottom of the crisis, S&P has been outpacing the EFA in this case, and this other graph here, which is as dramatic, is the EEM. So the emerging markets have also S&P has outpaced them. So when it goes down, they probably won't go down as hard. We'll go down harder when we turn. This chart, there's actually a substantial trade on both of these being. And Don, if I have many of you that are doing spread trading, but if you're doing international spread trading at some stage, even long the EFA, short the S&P is going to be a great trade. I wouldn't be surprised if they got an ETF or something out there for some magic formula for that. Last but not least, we'll take a look at some of my intraday stuff. I saw these cycles just hit spot on. The low today really hit spot on. It looks like the last hour, if we have held the lows that we made early today, we should see further recovery, at least stabilization into the close. I usually talk about that a little bit, but these patterns were spot on. This is a 5-minute, 24-hour chart. The hourly graph, you'll see the same thing. We had a volume cluster here, and the actual cycle hit about an hour before the actual low came in, and then we see the swing index spiking. Not a huge spike, but certainly below the levels that we've seen, and you want to see that for a significant low. So my guess is we'd probably hit the low of this pattern on this decline. Now we're going to start a retracement. As I mentioned, we'll go to maybe 1980, back to retest to 1985. Otherwise, the trend, or the lack of trend, or the sideways trading range continues at least for the next couple of days, and I would suspect into the Fed FOMC minutes, as well as the conference by Yellen. We're probably gonna be locked there at that point. Then it's going to be onward to August and onward to employment situation and all that, which we'll cover in detail on Monday morning. So I think let me bring Mitchell back here. I think I'm done on covering all these markets here. There you are, Mitch.
All right.
So I'm going to go ahead, and I'm probably not logged in when I go to do that.
It's all right. I'll go ahead and log in.
Okay. So while he's logging in, part of the issues that we're seeing on the database is really just more of a minor rotation, which is pretty typical from where we are right now, and that's how it's going to look. You want to log into 2.0 while you're there doing that stuff? And
yeah, I think should still be logged in. I guess not.
No.
Give me 1 minute.
Yeah, so anyway, Yeah, we'll go through the numbers in the database. I didn't see anything popping out big from my viewpoint.
Yeah, there's a couple of things I want to just take a moment to address, and some of this we're going to do within 2.0, some of it we're going to do in the commentary. So give me 1 second. Just getting set up here. All right, do I have control, Bob?
You do now.
All right.
Sorry about that.
It's all right.
I grabbed that wrong mouse there.
All right, one of the things, I actually want to start off with the commentary just to put things in perspective. This year has been sort of an interesting year when you look at the various different indices. So looking at today's commentary, you'll see that this last week on the S&P 500, which a lot of advisors I know regularly watch, we essentially ended the week flat. We ended at slightly positive 0.01% up on the week, so it's as if nothing took place on the traditional large cap index. However, if you look here on the Russell 2000, you see we had some more selling. So we're still down 1.63% on the year now for the Russell 2000. So for those of you advisors that are using a lot of small caps or mid cap stocks within their portfolios, you're likely seeing some significant difference in those positions and their performance versus something like the S&P 500 because of the stock selection you're choosing.
Yeah, and I think there's probably some mid-cap stuff going on there as well, right?
Right.
There's, and that's really key because somebody will call and say, hey, our portfolio is really underperforming. Then you look at the constituents and you go, well, yeah, it is, because you've got small caps or maybe have more cash than other strategies just because of those of this rotation that Mitch was talking about. So, while everything else that, like I said before, this is a large cap rally led primarily by the S&P. NASDAQ is competing. Dow Jones is not, even though it's mostly large cap. The 30 stocks aren't doing, but it's definitely an S&P kind of deal here going on.
It is, and one of the things that we came up with in the commentary, and we've been doing this for at least a year now, is this buy the box view of things. And we've gotten a couple questions over the year or so asking, well, what does this chart represent? What I did is I took really the components to our all-weather ETF strategy, the Guggenheim growth series and value series of the small, mid, large cap ETFs. And I put them in this, and I'm viewing it as far as the year-to-date performance on this. And the reason why I'm using those particular ETFs as opposed to the raw benchmarks that they represent is for twofold. One is because this is actually something that you can invest in. We do have an all-weather ETF strategy that represents these same boxes. The other thing is that these ETFs have an additional pure filter that they put on it to get a little bit more of the cream of the crop in each of these different style boxes, as opposed to just taking the broad index in each of these spaces. But if you look at the buy the box numbers, you'll see that the large growth is performing 11.3% for the year. So there's the top performer, as you see, with this performance divergence. Anywhere where that white square is, that signifies it's the best. And it shows you the difference between the best ETF and all the others when it comes to the traditional style box. And you see in both the small and mid cap spaces, they're almost flat, if not negative, for the year. Even though the large growth is performing so substantially well, both the large growth and the large value. So again, stock selection, style box selection is key, and you're also seeing that within the S&P 500. This pacing chart here shows what the index has done year to date. So in this case, we're up 7% on the S&P 500, and it's showing the percentage of stocks that are overperforming or underperforming the benchmark year to date. So you see at this point, 53% of all the stocks within the benchmark are underperforming that 7%. And you can see how this bell curve forms, at the worst performer being down 40% to the best performer being 80%. So what we're seeing more and more, we've talked about this numerous times, that we're seeing. I think we lost audio there, Bob.
No, we're fine. Just keep on going.
Okay, sorry about that. So it's one of the things that you need to keep an eye on when it comes to the overall database.
So hang on a second. I believe Jay is saying, but I think I'm showing that it's working fine.
The audio is back up now.
Okay.
So,
Yeah. All right. Sorry
you're
about
on
that,
my end.
folks.
So on the research side of things of 2.0, you see that we're back down to 65%. So as Bob mentioned, we had a slight reduction in the holding. It's pretty minor. If we go to the all stats page, we can see the total number of trades. So this week we had 150 brand new buys in the database on the weekly trade systems. We had 1,054 sells. When you look at that, I took a view of the database on my end, and I saw that a lot of the cells that we're seeing, they're primarily isolated to the non-optimized trade system. So these are not the across the board. These aren't the best performing trade systems on each of these stocks and mutual funds. But the other thing that we're seeing is also that it is really isolated to those small and mid cap style boxes. And you can also see that here when we go to our normal dashboard charts that we'll dig into now. So getting started, looking at the sectors, you see here that it was really some broad-based selling. It was about 3 to 5 percentage points across the board. Some had 6. Most were in that 3 to 5% range that we saw selling. And even if you go through the groups on these, you see it really impacted all of them. At least there was some sort of selling exposure across the board, but it wasn't really concentrated. So when I dug into this further, the story that I'm seeing here is that this really is based upon more of the capitalization of the companies as opposed to any sort of particular sector or group rotation that we're seeing. So again, if we go over to the fund side of things, you see that we had some more selling. We had a 3 percentage point move when it comes to the U.S. equity high level view of it. And then when we click on the U.S. equities, we can get that drill down to see where those cells were located. And here it is that you see that really all that was in the small and mid cap spaces here. Had some minor activity on the large cap space, slight buying in the large value. Really the selling that we saw across the board was in the small cap space as well as touching upon the mid cap space as well. There isn't a lot to mention on the weekly research. Again, these are a number of ETFs and mutual funds that a lot of advisors typically have within their portfolios or they're keeping a close eye on. I think the only activity they had this week was Singapore, so really not a lot to comment upon that. And then lastly, we have the globe at a glance. So let me pull that up. No. Bear with me 1 second. I clicked on the wrong button.
Let me drive here.
Yeah, please do that.
Okay.
All right. So last week it was a pretty quiet week. When it comes to the news, I thought it'd be good to actually talk about some of the regional influences. Obviously, we've heard a lot in the news lately about Russia, Ukraine, as well as Israel. So one of the things I just wanted to point out to advisors is the ability to actually zoom in on this chart so you can get a better look. So we've seen a lot of news about the Ukraine and Israel. Year to date, Russia is down 13.56%. So even before all this was unfolding in Ukraine, Russia's been having a tough go at it when it comes to those markets. We're seeing that carry over into this year as well. One of the things I thought was interesting is I think the best, if not one of the best, ETFs performing this year on the iShares single country ETFs is actually in the same region where there's a lot of this activity going on. And this is Turkey, where it's actually up 26% of the year. And of course, Israel, for all the activity that we've heard about in the news about all these missiles getting launched over by Hamas and Israel coming back at it, they're performing just as strongly this year as our own domestic markets. And so the reason why I'm mentioning this is it's really easy as advisors to look out there and see, well, what's causing the market activity across the world. And what does this mean for our markets? And what I just wanted to highlight is just because there are some pretty significant events taking place across the globe, especially with some military activity, it doesn't necessarily directly translate to significant downturns within the market. Russia has its own issues when it comes to its economy. And Israel, even though they're regularly getting bombarded with these homemade missiles and rockets, they're still performing just as strong, if not stronger year to date in their markets than our S&P 500 market. So again, this is all information that you could dig into. You could zoom in on and see this data on our website.
All right. Well, I guess we'll be moving on toward some of the stocks today. And why don't we start, since we were talking about earlier, why don't we start with maybe going through the Trulia deals and all that. Let me get on to a weekly. I think, yeah, let's go ahead and let's start there. So what is Trulia symbol?
Trulia symbol is TRLA. And so for those of you that haven't caught the news yet today, Zillow announced that they're going to buy Trulia for a couple $1 billion. I think it was $3.5 billion. Let me just pull up those stats again. And in this case, this isn't a flat buyout price. It's actually going to be a share exchange. So they're going to be buying out all the shares of Trulia for 0.44 shares of Zillow. So this isn't quite as clear cut as simply saying, all right, we're now at the strike price, so let's go ahead and sell on it. In this case, it's more of a share exchange type deal.
You almost wonder if there
this transaction.
You almost wonder if there wasn't some kind of leak or something. Look at the last week's activity. It's
Thursday, I think it is when things started bouncing. And I did double check. I'm pretty sure Trulia's earnings actually are getting released today. So, I'm
somebody knows something.
Someone knew something before the news got released today.
Yeah, because I just brought up the daily graph so you can see the last 3 sessions. And I guess the real question is, we had a buy come out because of that activity this morning, and it's pretty much where it opened. It looks like it opened at 63.14. It's 63.30. So not a lot that you could have made coming into this. So one of the things that we wanted to cover it's really, 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 how many reallys was that? Important to make sure that you check out when you get these buy signals on these stocks. If you happen to have this in your list, make sure you understand, and you need to look at the graph. I mean, a simple, quick look at a graph would have showed that on the VPM stuff that there was a jump in the prices. We've got to buy. It's worth taking an extra probably 2 minutes to put in Google and see what kind of news is pending, if anything. Was there something that triggered that, to make sure you're not buying into something that's already happened? Did we find out what the actual price is on the exchange? I mean, what it equates to? Is there a premium on that, even though it's a stock deal?
It was a 25% premium.
Okay.
So that's a nice size premium on it.
Well, we're up 12, so we were up about probably 12 or more last week. I don't know if we can see what we were up, but my guess is most of this deal, once again, has been completed by the time that we got that. It's possible, that maybe if I don't even know. I've got a daily here. I don't have a model on it, but if I stick a daily, see if I can put a quick little deal in here. Is there enable to see strategies? Let's put 1-2 on there. I bought it Friday, so even then, I mean, I guess there's probably a 15% gain, but even looking at short term, there wasn't anything there, any way to capture that. So you have to make sure that you review these stocks, look at them, and make some good quality decisions around them. You can always call us before you do the order, and we'll do our best to respond to that. Normally we can, but there's typically, you just, if you have a concern, then, dig into these things. Don't just blindly put on a trade that you could put this on and maybe this deal goes down and it stays at 63.94 for the next 4 months. So you've got money coming in. The risk is that somehow the deal gets turned down by shareholders or something happens, and guess where you are then? You're back to 45 real quick. So you want to make sure you don't buy into these if you already owned it by some magical
well, we were long at before this, I think, on the 1.2 weekly.
Yeah.
So those people that were using that particular trade system, they're up nicely around 85%. It was the 3.2 system, which is the optimized system, that had the brand new buy today.
Yeah, I'm going to have to go over to, you logged into 2.0, right? Yeah.
I am, yep.
So, yeah, if we go over here and just put in, was it TRLA?
TRLA.
Yeah. Yeah, if we put this in, and then we'll see that this is the new buy here, but if we flop it over to weekly 1-2, you see that we had a trade on. It's up 88%. Huh? So
It's pretty good.
Yeah, if you had that on. So if you did have it on, you're probably okay to go ahead and sell that one. Take that one to the bank. Going back, just backstepping just for a second here while we're going through this stuff is we are seeing that a pretty good rotation, like I said, in the Mitch was covering on the primarily on the small cap. So you're continuing to see that happen. They were the leaders last year. Now they're the laggers, and you're continuing to see this stuff. So if you have a portfolio and it is building cash right now, do not be concerned about that. You want to stick and stay true to your style box that you're running, and let this thing rotate as it will. So I said this before, maybe the small caps are what end up being leading the market down as they let it up once this thing gets going here. And one of the things I didn't really touch on, I will do at the end of the show. I'll try to save some time and talk about some of the objectives that are out there on the S&P. I forgot I wanted to talk about that a little bit today. So go ahead, Mitch. Sorry.
Well, one of the other things that I wanted to contrast this with, we had talked about probably about a month or two ago now, the buyout deal of Hillshire. And one of the ways that this is different, Hillshire is HSH. This particular deal is a cash deal. So you may recall it went through a couple different jumps as there was some vying back and forth between, I believe it was Pilgrim's Pride and Tyson for this particular stock. So in this case, we saw the initial bump up, as you see on the chart, where Tyson said they were going to come in. Pilgrims came in on top of it and said, we're going to offer more. Finally, Tyson offered the highest price on it at $63, and it's really stayed there ever since. I think right now it's trading at, what is it, $62.78 still?
$62.78, yeah.
Yeah, there you go. Yeah, and it really hasn't deviated from that once they finalized the deal at the beginning of this month.
And I guess this is the conversation we've been having around these kind of trades. Right. It's much different doing individual stocks than it is ETFs. You don't have this issue. But when you see this, you can see it just flatlined, as Mitch talked about. So what's the point of holding it if you're at the deal price? And if you take it at the deal price and the deal fails, then you still have the deal price. So there's other advantages as well from the standpoint of having this thing go. And if you ever have that issue, whenever you sell out of a stock, go in and deactivate and turn off that stock as of the day that you sold it. That way VPM will reflect pretty closely to what your actions did as well. So that way you're mapping out your activities within that. This is not really an override of the system. It's a simple logical move to make when there's a deal on a stock anyway.
Right. Another reason why it's important to have a good understanding of what these companies are and what this, what's taking place in their industry. In the case of Hillshire Foods here, we had some other competitors that had the ability to vie for this stock. In the case of Trulia, Trulia is getting bought out by the number one company in the industry. Trulia is number two. There are no other players that are really going to enter into this equation when it comes to this buyout. Really where it hinges at this point is, is the Trulia shareholders approving the deal, which I assume will take place. And then, of course, there's always the concerns from a government level of, does this create a monopoly? I don't think anybody's really having that conversation at this point, just because this is such a new territory when it comes to the online housing and rental markets, that even though they're the top companies in the industry, there really isn't much of a particular industry that these companies operate in. Yeah. To have that monopoly.
I think Eric Holder and the guys are so worried about flying illegal immigrants around to different cities in the country. This is the last thing on their mind.
Right.
The realities are, what if they did have a monopoly? It's information distribution. We were looking at these companies are somewhat considered to be disruptors.
Yep.
And a disruptor is somebody who comes in and changes elements of an industry. Their impact is somewhat minimal, although they do charge for listings. So if they're doing anything, they're disrupting maybe the MLS service
Right.
that's out there. And if you've ever been on Truly, if you know a house, it's almost like Wikipedia. They'll let you, update the status of a house if you know it's for sale.
Right.
I'm not sure what happens
yeah.
once you do that, but whether they verify it or, and I've been told by realtors that you can't trust the information that's on there. Some are good, some are bad, and I have seen some inaccuracies using it. But for the most part, it's pretty good. And whatever, I don't know that they've ever, especially on Zillow, is shown their evaluation methodology, how they come up with pricing in neighborhoods and those type of things. But
Yeah, I'm not sure on that. I will say, as Bob is aware, I have I guess you could consider an investment property. I'm trying to turn it into an investment property that I recently went through the process of listing on Zillow, and it's sort of the Wild West. It really doesn't take much to say, hey, this property over here is mine. It's not like they go through any sort of verification on there. So when it comes to listing it for sale or for rent on a site like this, there really isn't a ton of verification, but it is one of the most commonly used starting points, at least, for a lot of either purchasers or renters when it comes into this housing market.
I'm going to get us out of this rabbit trail. Let's head down another one.
All right, another conversation. Coincidentally, on Friday, we talked about Dollar Tree. Ticker is DLTR. And we talked about probably the two most commonly known dollar stores out there. We forgot the third one. And ironically, this morning, Dollar Tree announced that they're buying out Family Dollar, ticker FDO, today. I'm pulling up the details again. I don't recall what the specifics are for the exchange, but I'll pull that up for a second. Right now, Dollar Tree is ticker DLTR, and it is trading on a 1.2 trade system.
So we were long it coming
Yep.
into this, and this is actually an interesting chart because this is one where we bought the breakout. It's been pulling back into the pattern, so to speak, and then a deal busted out into new highs and profitability and trade. So pretty much since the week that we bought this thing, it hasn't been working. I talked about something I know in the last week or so, but I'd make the comment again, is that about 85% of every trade you put on will go against you before it will go for you. The goals of VPM, and the reason why maybe you'll look at a low and say, gee, it waited so long to buy. Well, it's trying to buy at the least amount of adverse excursion, or the point where the trend has been confirmed, versus trying to guess at the trend is going to happen. There are patterns that set up that have a higher probability for a trend to emerge from, which you'll see VPM buy crazily good right at the bottom almost. And then there's other scenarios where it's not going to buy at that bottom, even though in hindsight you can look back and go, oh, look, there's the bottom. It bought on the way up. That's part of the setup and the configuration that it was buying into. There's several patterns that it sees, and a couple of them are obvious from that standpoint, and they tend to work out really well, and that's the point. So I've always figured out one of the hardest things for anybody that ever buys a stock, buys anything, is having it go against you when you buy it. So if the least amount of adverse excursion or the least amount of pain to get the profits is always the best way to go, because that's where everybody makes mistakes around. That's where the emotions come in. Oh, we're losing. And this case here, you see, what is it? Looks like 7 or 8 weeks, just glancing, that this particular symbol was declining all of a sudden. Yeah, it was saved by a deal, but doesn't matter. It's part of the history. It's what's driving the prices. And I don't know, Mitch, what's the buyout on this? And we're at 75.28.
So this is a cash and stock buyout. So the bid is for $59.60 a share in cash, as well as Dollar Tree stock at $14.90. So it's a 23% markup on this, and so you see it's already trading.
It's up 24.10. So the deal's done.
Yeah, the deal's done. Yeah,
the deal's
so
done.
They say here $74.50 per share.
If you had this and you went through the 7 weeks of pain, take it off the sheets. Go to the bank with this, and you'll have a little bit of cash, but you just clocked in, and you didn't get a full 24% gain because from the entry point, it's probably less. It's probably 12 or 15. I don't know if we can bring up 2.0, and it should show off the current price what that position is. Maybe I can do that as well.
Yeah, in 2.0, I have Family Dollar pulled up. We're currently showing a 10.5% gain on it.
That's all you're going to get, folks. That's it.
Yeah.
Now you can think about whatever you want to think, but it ain't going any higher. That's it.
Which isn't bad for a little over. Well, I guess it's just shy of 2 months holding on
it.
So it's a 10% return.
Take it and run. Find something else.
Invest it in something else.
Yeah. Keep doing your screens, and it's like. To me, maybe it's just coming from all these last 35 plus years that I've been doing this. Is I always thought whenever I could look at a chart, look at something, no matter what it was, and I bought it and it went up, I always thought that was a miracle. So, it's like, wow, I figured that out before it happened. So anything that you figure out these profitable trades, we didn't really talk about the trade impact charts today, but that's what we're talking about. It's going to be 10% and maybe a 5% gain. So we're talking about a 0.5% impact to the portfolio, most likely, if you have it in there. And that's probably a typical number. That's probably something we should look at, Mitch, thinking out loud here, is what is on the trade impact, what is the average impact that the trades have overall, not just we have the individual, we know what they do. I wonder what the average impact is. So maybe that's something to make a note of, and it wouldn't be a bad stat to have, and maybe even some standard devs, so you can start to develop some better expectations. Listen, being a quant like we are, we're always trying to find ways to evaluate and to give you a better perspective. So when you get a 0.5%, maybe on your portfolio, on your trade impact, maybe a 0.5% is pretty much what you get out of from an impact. So a 10-15% gain, maybe that's what you're getting out of these things. So, there's nothing wrong with taking profits, as they say. A buddy of mine used to say you can't go broke taking profits. So,
that's right.
So you can leave a lot on the table if you don't take them at the right times. What we're talking about on deal stocks like this, there's just no reason to hang around anymore once the deal's been announced, especially if the market has already responded to that. You always have to wonder when you see a deal stock that it's, maybe the deal is supposed to be at 50 and the stock's trading 42. I won't go through the story, but I found one of these back in 1992 when I was on the trading floor. And we were running a hedge fund, and there was a stock that was trading at a discount to the deal, and we couldn't find a reason why it wasn't going to go through, and we put on an option strategy that made a lot of money for the almost zero risk. So it was a crazy trade from the standpoint of how much money they were allowing us to make, and we never did figure out why that happened. But you do see that. But most times when you see a deal that's trading discount, you probably you want to watch that one pretty close, because that deal has got some questions. The arbitrageurs and the people that play these situations are not showing up to the party, or they're not putting the money up like they normally do. So there's something to be said there.
Yeah, and I think we saw that in the recent earlier this year with the deal between Pfizer and AstraZeneca.
That's absolutely right, because that deal
as time went on, the share price started drifting lower, and it was pretty clear that people knew that this deal wasn't going to go through, and sure enough, it did.
And the first stab at that was to grab it and run.
Right.
And I think it was slightly discounted as well. There were issues all around that deal that it just stunk from the beginning, and and then didn't somebody else try to bid too? That was quite the dynamic deal, if I remember right. But
I know that. Well, what happened was I think there was 2 or 3 different offers by Pfizer, and every time the board and shareholders rejected the offer, and so ultimately it didn't go through in that case.
All right, moving on.
The last thing I wanted to mention was in regards to Dollar Tree, just sort of finishing up this thought. So in this case, did you have any comments, Bob, about when a company is the buying company, what to watch out for in these type of deals? It's easy to talk about the company that's getting
Yeah,
bought,
no, that's
turning it
cool.
on and
Yeah,
off.
that's true. That's true. What, and in this case, what's the symbol here for these guys?
Dollar Tree is DLTR.
DLTR.
And one of the things to keep in mind, because this is not just a cash deal, it's also a cash and stock deal, there is going to be a little play in both of these stocks because theoretically these companies are merging together
Right.
when this is all said and done. So we're going to have to watch both of these stocks going forward if you own these, as far as what this company is going to look like.
And there's something else I just had, just this synapse just fired, is that there's something else going on in this space. There seems to be some movement going on that maybe these guys are starting to see a little stress in their business models. And if you look at where most of these stores are located, they're typically in rural areas, and maybe the economy has gotten. I guess maybe this is a sign that there's enough. Maybe it's better than enough that they're heading down to Walmart now instead of these guys.
So Walmart and Target instead of Dollar General or Dollar Tree.
Yeah. So but the bottom line is, you can see this stock actually spiked up a bit, and this is weekly. Let me go to daily just so I can get a better view of this of the day-to-day activity. So this spike all happened today.
It opened at 60.
Yeah,
At 59.70.
Been solid selling since the opening. And matter of fact, we can see this. I'll show you. I'll go to a 5-minute graph here, and you can see it's like a flat line. It goes up, and it was just selling until this thing is just drifting lower here, and you probably see it more dramatic here on a 1-minute graph. There you go. You can see it started up quickly and then just has been fading all through the day. So so the bottom line is there was a pop here. We don't have it doesn't look like we have a position. Let's see, this is daily. We don't have a position on the weekly, I don't think, either.
We do.
Oh, we do have
on
that.
1.2. Okay. Yeah, we're on 1.2. I think we're down slightly. That may be no longer true after today's activity.
Yeah, we're still up 275. So typically from a technical standpoint, we'll just cover this. We only got a couple minutes to go. From a technical standpoint, when you get a spike up in price here, you get that will put a resistance point. So the high of the day today is 59.84, and that will become somewhat of a barrier for the stock to move higher. But trend-wise, 0.56, 0.12, and minus 18. So you got a positive on the short term. You still have a positive number to look at there. So before we move on, we've only got a minute and a half. So that'll be for the stock of the day. I want to go back and see if I can get. I wanted to look at a couple other situations here, and we pretty much stabilized at the 345 level from that standpoint. And I wanted to look at how these cycles are starting to play out on this short term, looking into the close. And I know what I wanted to look at. It's not what I want to look at all. I wanted to go to the get to the right chart here. Wanted to get to the objectives I talked about. There were 3 new objectives on a weekly: 2087, which is about 100 and change above where we are right now, and then 2139 and 2171. Those are the objectives on a weekly basis. Let me just put this up in as fast as I can. I got 1 minute to go. My producer's not easy to get along with, which is me, so he won't let us run over. But anyway, the bottom line is we've got these objectives. You can see them up at the top, maybe where my cursor is. It's very, you know what? I can pull it down. I've got it on dragging, so you can see them. These are the 3. The minimum is 2087. It looks like a reasonable target. It goes together with the 2074 number that we were talking about before. 2034, I think 2072. So 2072, 2087 is going to be a pretty good target range. I suspect we'll continue to see this market climb up there. So with about 10 seconds to go, I guess, Mitch, you got anything for the final?
Well, just stay tuned with the commentary. Obviously, as we've already talked about, we got a lot coming out this week, and so the commentary is going to be the best place to receive that before Friday's broadcast.
And one of the things that I will do, you folks need to know, is if there's any kind of weird major event of any sort, we will go on the fly and do a market update. I'll just bring up the screens. You'll get an email if you're following us. So if you're not following us on Ustream, do it. But we'll also probably send a tweet out that we're going live. Even if you don't have time in that second, you can go back and watch the stream. So just like the old days I used to do the podcast, we're using this format now to out to anything that's happening that we can go out to you. So the show is done, and we appreciate it as always. So have a great day. We'll talk to you on Friday. We'll keep the commentary going. Like I said, if there's anything big that is material, then we will announce and do a show on the fly. Thanks again. Have a great day.